Hello and welcome to the Mutual Fund Guide. It's all about your funds and your returns. I'm Muralidhar Swaminathan. Joining me on the show today are Swarup Mohanty, CEO of Mirai Asset Mutual Fund, and Hemant Rustagi, CEO of Wiseinvest Advisors. Gentlemen, welcome to the show. Thank you so much for joining us. The big news. Mutual funds are back on the radar of investors. They witnessed an inflow of 8,055 crores through SIPs in the month of March, while equity funds saw 9,000 and odd crores coming in. However, balanced funds remain subdued. We got a word from NS Venkatesh, Chief Executive Officer of Btvi, on what this trend is and how the data inflow has been. Let's listen to him.
Essentially, we are seeing that it is mirroring the way the market has behaved, in the sense that the volatility in the market has come down a little bit, and the credit events and the border tensions and all those things have eased. And with the economic fundamentals showing better numbers, in the sense that the growth is over 7%, inflation is contained at somewhere around 2.5 to 3%. I think the market is expecting better days ahead. So to that much extent, the indices, whether it is the Nifty 50 or the BSE Sensex, have shown positive trends upwards, reaching newer heights. So I think that is bringing a sense of positiveness into the mutual fund market also, where people have taken interest to invest into the equity mutual funds. So if that is a premise under which we are discussing, I will say that over the period in the next few months, we should see equity inflows coming up with a bang.
Well, very clearly the momentum is there in the market. Mutual fund investors have come back. I guess it's both SIP and lump sum. But before we do that, it's very important to analyze the mutual fund inflow trends over the last 5 to 6 months. My colleague Vandita is standing by. Vandita, take us through the trends.
Right. So AMFI has released its data for the month of March on Monday. And if you look at the net inflows into the equity MFs, that almost doubled in the month of March from the previous month. Let's try to analyze the data. Let's start with equity fund inflows. So for the month of, if you look at the month of November, the inflows stood at 7,579 crore rupees. And then we saw a little downfall in the month of December 2018. And moving on, in the month of January, again we saw a little downfall, and it stood at 4,914. And also, like previous months, we noticed that it stood at almost 4,000 crore rupees. But in the month of March, the kind of surge we have seen in the net inflows, net inflows in the equity mutual fund, that stood at 9,014 crore rupees. We saw a surge of almost 128% from the previous month. So clearly the trend is quite healthy and positive. Now what led to this spike? If we try to understand that, it could be due to positive sentiments in the market. The volatility have gone down. Also, we saw that FII inflows were quite robust in the month of March. Almost $5 billion were added in the month of March. We saw double-digit growth in the BFSI category. The banking funds, there was a big surge on that front. Even the interest rates eased after the monetary policy. So all that really did quite well and helped the equity fund to grow, and we saw the surge in that category. But moving on, let's talk about the underlying trend, which is the SIP. There was some kind of saturation that we saw in the SIP inflows. Like if you look at in the month of November, it was near 8,000. Again, in the month of December, it was near 8,000. In the month of January, also it was almost at par. In the month of February, it was a little up at 8,094 crore rupees, and this month it stood at almost 8,055 crore rupees. So clearly, we can see a flattish trend on that. In the inflows coming from SIPs, and from the month of November to the month of March 2019, the trend was almost flat, and it was hovering near 8,000 crore rupees. And now we saw that the net equity mutual funds, the inflows have gone really up. It was up by almost 128%, and the trend in SIP inflows was a little flattish. So clearly we can say that the lump sum investments might have gone up this month. Moving on to the imbalance category, which was the balance funds. Yeah, so we saw a drastic imbalance in this category. Let's start with the month of November 2018. So there was a inflow. It was still in green. We saw inflows were at 215 crore rupees. It went down, but still were in green, and it stood at 45 crore rupees. But from December 2018 to the month, to the next, like January 2019, there was a strong outflow, almost a 2,000% outflow that we saw from December to the month of January. So we clearly saw that, and then the trend was continuing. The downfall continues for the balance funds. We saw in the month of February, it went further down, and this month, it was actually double. It stood at 3,000 crore rupees. So clearly the kind of outflows we are seeing in balance funds, that's creating the imbalance here. Now, we are not sure what is the particular reason for this outflow. Is it the dividend distribution tax? Is it the volatility? Or what is it? But as of now, these are the trends that we are watching.
Okay. Manita, very interesting, the outflow in balance funds, the pickup in lump sum, but month on month SIP inflows are saturating. People don't like balance funds. What do you think?
No, I think if you look at the balance fund story in particular, it was a different story last year, which seems to be reversing this year. If you look at overall performance of the balance fund, they've been not bad. In the 1 year return of balance fund, average category is similar to the multi-cap fund. So there's nothing wrong with that. It was sold on the premise of a dividend, monthly dividend, which is tapered off. And once that happens, a certain category of investors come in. Looking at monthly dividend, though I've always wondered why should one depend on a fund for dividend when the cash flow is not in your control. If you want a dividend or a cash flow, actually, you should take the SWP route rather than the dividend route. But that's playing out in this story, and once the dividends have tapered out, we're seeing outflow because the inflow was robust.
Right. But was it also because, at one stage we saw massive inflows coming into balance funds? Was it because of the impact of demonetization that people went into balance funds, did not want to keep cash? Was that the reason? Because they would have been first-time investors.
No, there's no concrete data saying that they're first time or not, but the fact is monthly income is a huge requirement for a certain segment of people, and there's no denying that. Earlier, when you look at the fixed deposit regime, there was the monthly income plan, which was then the mutual fund also tried the MIP route. There is a definite, market for that, and we saw an inflow based on that more than, post-demon anyway, the equity markets or the mutual fund markets went into the positive zone. There's no denying the effect of demon on the overall mutual fund scenario. The financialization of assets are happening, and mutual funds probably are the best benefactors of that. But this story is, I would restrict it to completely the monthly income story, which is panning out now.
Right. Let me welcome Hemant also. Hemant, just because there have been net inflows doesn't mean that balance funds are bad investments.
Not at all. Not at all. I think the balance fund have an important role to play in every investor's portfolio, especially those who do not want to invest 100% into equity. So clearly, there are 6 categories of balance fund, and essentially what we're talking about is the ones which is called aggressive, hybrid fund, where 65% or more is invested in equity. I think they have an important role to play. The problem in the balance fund is not many investors came into them thinking they want to balance in portfolio. Most investors came in because they wanted maybe a good return, and the markets were doing very well. These balance funds were performing very well, and there were those who wanted regular income. Not necessarily because they needed regular income, but because they thought it was a great way of booking some profit, and since there was no tax on that earlier, so I think a lot of money was coming into that. But I think after there's a dividend distribution tax imposed on these funds, clearly what we are seeing is all those guys who are looking at these funds as the generation of regular income are having a rethink on that. And clearly that's why you're seeing that these investors are exiting from there. But otherwise, I feel that, they continue to remain an important part of any investor's portfolio. And it all depends on, it's not necessary that even if you're an aggressive investor, then you cannot have balance fund in your portfolio. It all depends on your time horizon. If you have a time horizon of 4 to 5 years, these balance funds are still ideal for you. So I think we will see this settle down, Murli. I feel that all those investors who wanted regular income, and as Sarup said again, a dividend distribution tax is an issue here, and anybody who is looking at systematic withdrawal plan can actually reduce the impact of taxation on that. I think once people work out their strategies, you will see this trend reversing. I'm sure about that.
Right. Let me go back to the sudden surge in investments through mutual funds. 9,000 and odd crores,
Correct.
something which we did not expect. I'm sure you would have got a lot of business there. Are they one-time investors who come in?
No, I don't think they're one-time investors, but sadly, investments in equity still remains very sentimental driven, which contradicts the basic thought of wealth creation on a long run. They should stick to asset allocation, not get swayed by some events which flow out. But if that be the case, because it's coinciding to what was discussed earlier in the program as to what some of the effects which I've had, but I would feel the inflow is always welcome. India is a good structural story, and buying equity at any point of time is good if one sticks to the horizon and the risk profile of the particular scheme. So I was not surprised by the inflow at all, though I had not expected it at 9,000. I had put it at 6,000 to be very honest. Yes, it's been a good month for us too, so I'm not complaining on that at all.
Right.
Because for a change, the industry is taking money in the right place. I mean, the good funds are getting money, the right categories are getting money. There is no sectoral play.
So
here.
your AMC is also getting good money, I suppose.
Yeah, last month for us was the highest net sales month since we started the business in India in 11 years. So
Wow.
we are not complaining. It's been a good month.
How much was the kind of inflows that you would have got?
We crossed 1,000 crores in net last month. So out of 9,000, 1,000 is ours. So that's a decent share.
Oh, that's a good good contribution coming in from the industry.
Correct.
At what rate are you growing? Which is your most popular fund, and how are you growing?
So two of our flagship funds remain the most popular fund. In fact, there is some discussion on because we've reclassified India Equity into the large cap fund. We're taking that discussion in the market. There is this assumption that large caps will not give returns. We completely do not agree to that.
Yes.
The broad industry bases its allocation to large caps. Multi-caps are 72 to 75% large cap. Even the focus category is around 70% in large caps. So we completely disagree with that. So that's got us some attention, but that fund continues to add money. The emerging blue chip continues to be one of the best SIP funds in the market, and that's around 150 crores per month. So we are poised to launch a new fund this month end. So yeah, we are looking okay in the market.
Yeah. In fact, I don't have this table in front of me. Large cap funds and blue chip funds, most of them invest in large caps. They've given an average of 7 to 13% in 1 year. I'm not looking at 1 month. Roughly 1 year they've given positive 7 to 13%, as opposed to small and mid cap, they are in the negatives. You may want to add to that.
Yeah, you're right, absolutely. If you look at last 1 year, that has been the trend, and we've been seeing it for the last few months, that the large cap have definitely outperformed small cap and mid cap. But I think it's clearly, again, the way you design your portfolio. I believe that for anyone who is investing for a long term, I think there is a scope for you to actually have mid cap and small cap. It has to be in the right proportion. What happens is that when the markets are doing very well and these two category of funds were doing very well, a lot of investors actually invested very aggressively into those. So that is something that has to be avoided. If you avoid that, and my belief is that if you're a long-term investor, you can invest around 50% or maybe 60% in large cap, and the remaining can go into mid cap, small cap. I think all segments have a role to play in your long-term portfolio. It's just that it has to be in the right proportion. And clearly you'll see phases where because these two segments tend to be much more volatile than the large cap, and you will see these kind of period. And as long as you have the risk appetite to withstand this kind of volatility, I think you're all right. But your allocation has to be right.
Right. Before I take a query from our viewer, I want to come back to you. SIP, you want to add a point?
No, just to the flow, since you add very interestingly, because the balance fund data is showing very negative. For the last 1 year in continuation, our balance fund has added 80 to 100 crores net per month, and it continues to add positive 80 to 100 even in these months.
Okay, so that's the industry figure, but specific funds are attracting money. My next question to you is SIP inflows are saturating.
Correct.
Is this trend, or is it something where the industry sees that it can't go beyond as far as SIPs are concerned?
No, especially to SIP, I'd like to point out one factor is a lot of SIP was added by a segment which was driven by upfront brokerage. And there has been a change in regulation. So those people are making adjustments in their business plan. So maybe at this moment you see a slightly flattish trend, but SIP is a sold product. There is no doubt or debate that the country is taking this route, and rightfully so, as an investment process. And we've witnessed some some incredible SIP flows in the last 2-3 years. Let's keep in mind that the 2 years has seen volatility. Some of those investors have not been making money for 2 years, and yet they're staying put, which is in complete contrast to their behaviors 4-5 years ago.
Correct.
So I don't see it stopping at all. I think it's just a adjustment to the new remuneration regime, and once that comes into place, everybody's put their own adjustments to business plans in place, we will be back on track.
Absolutely. In fact, very interesting question that has come up, which is very relevant. SIPs are the order of the day, and some investors want to be innovative. Here is one gentleman, Ram Subramaniam from Tirunelveli. He is saying, we put SIPs on fixed dates. Why can't I invest SIPs and design my SIPs when the NAV is low? Is that possible?
Well, Murli, every investor would want to invest at the lowest level of the market,
right,
and exit when the market is at the peak, but it's easier said than done. Let's understand what happens in SIP. Suppose you're investing in 2-3 funds on 2-3 different dates, and you invest in SIP for, let's say, 10 years. So imagine on how many days your investment is going, and believe me, if you continue to do that, you definitely benefit from the averaging the way you should be. What you're trying to do is, instead of going into systematic investment plan, you're again looking at timing it. And then, suppose you're given an opportunity to invest on a day when the markets are down by 500 points, and you feel that is the bottom.
Right.
You invest money, next day it goes down by another 300, 400 points, or it goes up the other way around. How will you do it? It's impossible for any investor. Forget investor. I think even the best of fund manager can't time it to that.
No, but he can design a product to suit the requirement.
No, the industry does give the trigger option.
Right. Okay.
You can sort of trigger your levels, and the NAVs the units can be transferred from the cash fund if you want. Lot of players in the market give you a trigger. We give a trigger option.
How exactly
right or wrong, Hemant sir is the right person to talk, but as a provider of facilities,
how exactly does that work?
You can fix your level of the market. If there's a fall or anything, I mean, you can come and track us on the website. It is available.
So that's directly I have to go to your
No, through a distributor. It's designed on the form itself. You can set a trigger, and it can be triggered as a facility. Right or wrong, I'm not commenting, but somebody who desires to can fix a level at which he can.
But it can be automated and
yes, it is automated. It is automated.
Okay, excellent. So there is an option, Subramaniam. It can be automated, and Mere Asset Swarup Mohanty says that his AMC is offering. But I need to slip into a short break and come back before I take the next round of questions. Please stay tuned. Welcome back. You are watching the Mutual Fund Guide. Let me go straight to the next query. Vaibhav Nalwad from Bengaluru has mailed us this query. He is investing through SIP 5,000 rupees in Parag Parikh long-term equity, Axis long-term equity, L&T emerging business, L&T mid-cap, and Franklin India feeder, Franklin US Opportunities Fund. He says his time horizon is 15 to 20 years, and are these funds appropriate? Any changes are required?
Well, I think two important things here. One, the time horizon is 15 to 20 years. So clearly investing in equity fund through SIP is the best strategy. In terms of composition of the portfolio, if you really see, there are 5 funds. And I think there's a good mix of a large cap, multi-cap, large cap oriented multi-cap, but that fund also invests around 35% in, I'm talking about the Parag Parikh long-term equity fund. And then he has a fund which invests in US. So I think in terms of allocation, he's all right. My belief is that whenever he decides to, increase his SIP amount, he should include one pure large cap fund. I think it's very, very important, and we did discuss that issue earlier, that it's very, very important to have a good amount of allocation to large cap. So I think if he does that, and assuming a return of, let's say, annualized return of 12% over the next 20 years, if he continues his investment of 25,000, he can hope to build a corpus of around 2.5 crores. So I think he's in right track. But like I said, add one more fund, I think he should be fine.
Right track, Vaibhav. All the best with your investments. The next query is from R. Kameshwara Rao from Vizag. He has mailed us this question. He is a pensioner and invested 15 lakhs in SBI equity hybrid due to their quarterly dividend payments. He received half dividend in the September month, that is 2008. Then there was no dividend in December. And again, a quarter, that is I think 0.25 basis points. He wants to know if he should switch to another scheme or go for bank deposits.
Well, let me begin with what we discussed earlier also. I think in terms of the category of fund, I believe that even for someone who is retired, I think this category has an important role to play. Only thing is you need to be careful in terms of how much exposure you have and what are your expectations in terms of dividend. We did discuss earlier that since there is a dividend distribution tax now and the fact that the market has been a bit volatile over the last 1 year, you have seen that impacting the dividend outgo. So that's what has happened to this fund. This fund has been doing reasonably well, so you can remain in that fund. But I think it will make sense maybe if you want regular income from this, you can switch to maybe allow the money to grow for a year. Or even if you do that systematic withdrawal plan, I don't think there will be any exit load for you. So you can actually switch to systematic withdrawal plan. It will do two things for you. One, it reduces the tax incidence for you. And the second thing is, despite being in a market-linked product, you'll be sure about how much money will come to you every month. So two important things. Make sure that exposure to this category is not too high in your portfolio. And second is, don't be totally dependent on the income which comes from this. But if you switch to systematic withdrawal plan, you can bring some kind of consistency in the kind of return you get from there.
Right. The advice is very clear. Before I go to the next query, you want to add to that, how do investors manage? Many investors are stuck in this kind of a dilemma, whether they should switch to a different fund or FD or switch to SWP.
Yeah, I completely agree with what Hemant sir has pointed out. There is nothing wrong with the portfolio or the category called hybrid funds. Those returns are intact, and whatever is the return projection of most of the category players will remain. The issue happens when you bank on a fund, and this is not just about the hybrid category, overall for your dividend. Please understand, dividends are subject to surplus from the funds. When the fund has a surplus, it will give you returns, dividends I mean. So you cannot bank on your personal cash flows requirement based on dividend. That is fundamentally flawed. If you take the systematic withdrawal plan, first what you do is you are in control of your cash flows and you fix how much money you want. And then a good advisor, like Hemant sir rightly pointed out, can guide you as to how you can go about doing it, whether you want monthly, quarterly, yearly. All the options are under your control. So I would definitely advocate going through the systematic withdrawal plan rather than depending on funds for your dividends, because funds will give what they feel is right and they may not suit you.
Right. Before I close the show, Hemant, if somebody has put in, it's a very important question, somebody has put in 10 lakhs, as a lump sum. How much SWP should they do on an average account for an 8%, 9% kind of a return? Based on that, how much can they withdraw every month? Say about 10,000 or?
Murli, I would put it at around 6%.
6% to be honest. So you let them grow, let the fund.
That's the money, because don't forget, even after retirement, you still have to tackle inflation.
Correct.
Okay, while you're looking at regular income for the current year, every year on year, your requirement of expensive money will go up. How do you tackle that? So I think it should be somewhere around 6%. So if you do it through systematic withdrawal plan, so that's what exactly we were discussing earlier, the tax incidence will be much lower.
So you can withdraw roughly 5,000 every month based on 6%.
And as you know that up to 1 lakh capital gain, there is no tax on that.
There is no tax.
So I think you can actually avoid paying tax. And then, normally I feel that if you have a time horizon of 5 to 10 years in a balanced fund like this, you can expect a return of 10 to 12%. In a balanced fund like this, you can expect a return of 10 to 12%. So clearly you still have, after taking 6%, money growing 4 to 6%, which is, I think, perfectly all right for anyone who's looking at regular income and growth.
Very simple and interesting approach. Keep 6% because that is inflation plus 1% roughly if you look at it. You will be able to withdraw about 5 to 6,000 a month and allow the rest of the money to grow so that wealth is created. Save, invest and prosper. That's all we have in this edition of Mutual Fund Guide. Thank you gentlemen for joining us and helping our viewers.
Thanks.
Stay tuned for more news and updates on the other side of the break.